the attractions of gold are becoming a bit clearer. It is a hedge in uncertain times, but most particularly central banks around the world, and including the United States most importantly, are targeting asset prices. So I think a lot of people would like to see asset prices higher, and if they're going to do that, they're going to be targeting higher gold prices, higher commodity prices, higher stock prices too. So yes, I think it's time once again to take another look at the gold metal. If we're going to see any escalation of uncertainty and tensions geopolitically in the Middle East and elsewhere, that if that were to push up the price of commodities, most notably oil, then actually gold gives you a bit of a free ride there. You don't have the same problems of storage, you don't have the problems of physical delivery, you don't have many of the problems associated that you would have with actually buying and transporting and storing oil. So in a sense, gold is giving you a bit of a hedge against an increase in geopolitical tension in the Middle East. I think I'd describe the ruble currently as comfortably neutral. If you look over the course of 2012, we've been down to 29 against the US dollar at its best level, and then up to 35. And here we are trading around 31.70, roughly in the middle of its range for the year. And I think that pretty much sums up investor attitudes. You know, they could say that if lots of things go wrong, if we do get the fiscal cliff in the United States, if we do get a recession there, if we do get a flight from risk, then maybe the ruble can be back up at 35, who knows, maybe even 36. If, however, things turn out pretty well, if we get a resolution to Europe, if the fiscal cliff is avoided, if asset prices more generally start to rise, then we could easily be below 30. And so I'd say the ruble at current levels reflects that balance of risks, with investors largely neutral. I've not spoken to any large investor who's got a particularly aggressive position one way or another in the ruble. Comfortably neutral is, I think, what best describes it. I think inflation in the near term is not a concern, but if you look at the amount of money that's being pushed into the system globally through quantitative easing, and if you look at the fact that the world economy is still on track, the world economy is going to grow 3% this year, 3% next year, we're looking at $20 trillion of additional GDP created globally over the course of the next 5 years, then it certainly is going to give an upward impetus to the price level, because the countries that are growing fastest are the countries that are most populous, and the countries that are heavily populated with fast growth are seeing a big increase in incomes, especially at the lower end of the scale. That's going to push up prices for food, for shelter, for accommodation, for transport and for energy. And to the extent that all those are important components of inflation measures across the world, then I think the risks are probably in the medium term more tilted towards the upside. But that, in a sense, is a good risk. I'd rather that we had inflation coming about from global growth than deflation that resulted from a global recession.